This is your LMAX Exchange technical update for Monday, March 27th, 2017. Euro dollar. So the euro's now really up against it. It's testing that critical resistance up at 108.75. That's the December peak. If the market can establish above 108.75, then it suggests that the market's seeing a significant shift in the structure, a bullish shift, after forming an inverse head and shoulders formation, which could open the door for a move up towards the 114 to 115 area over the coming days and weeks. At the same time, if the market stalls out into the 108.75 area and is unable to establish above this level, it will suggest that we could potentially be seeing the formation of a lower top up here ahead of a resumption of the broader downtrend. But right now, clearly with the market pushing higher, the pressure is on the top side and the outlook is favoring this inverse head and shoulders formation. 108.75 right now is that key level to watch. We recommend watching it on a daily close basis, so not whether we break it or not, but whether we see a close above or below that level for clearer directional insight. Sterling dollar. So cable is back up into a critical resistance zone in the 125 to 126 area. While the market has been bid over the past several days, the overall downtrend remains firmly intact, and so this rally is expected to be very well capped ahead of what could be the next major downside extension, eventually back towards a retest of the 2017 low at 1987, which guards against the plus 30-year low from October 2016 at 118.40. At this point, a break above the 127 area would be required to officially take the immediate pressure off the downside, but overall we need to see a break above 27.75, the December 2016 peak, to force a significant shift in the structure. Until then, the pressure does remain on the downside in cable. Dollar yen. So dollar yen continues to extend its decline since breaking down below a 400-point multi-day range. That break below 1160, that range low, projects now a 400-point projected move to the downside, a measured move which would take us down to about 107.60. At this point, any rally should be very well capped, with only a break back above recent resistance around 112.87 to take the immediate pressure off the downside. Euro Swiss. So it's been a slow go for Euro Swiss, but overall the trend here continues to favor the downside as the market, you can see here, is putting in lower highs and lower lows, and so this most recent high at 108.26 is seen as a lower top ahead of the next major downside extension below the 2016 low at 106.24, exposing the 105 area further down. Aussie dollar. So Aussie has recently topped out yet again ahead of 78. This market has been very well capped into the 78 area over the past several months, and so this latest topside failure suggests that the market could be poised for fresh downside over the coming days and weeks. If we break down below 74.92, a recent low, that will do a good job of strengthening this toppish outlook and accelerating declines, but any rally should continue to be very well capped above 77 and ahead of 78. Dollar CAD. Dollar CAD has been in the process of consolidating over the past several sessions, but here the overall outlook remains constructive, and so any dip should be very well supported, ideally ahead of 132, in favor of that next major upside extension beyond the recent highs that we saw up around 135.35 and through 136, that multi-day peak. Kiwi dollar. So Kiwi has also been consolidating gains over the past several sessions, but overall here the structure remains quite bearish, and any rallies are seen well capped in favor of that next lower top and fresh downside extension towards next key medium term support at 68.62, below which will expose move down towards psychological barriers at 65. SPX 500. So the S&P 500 continues lower after breaking down below some key support, which we highlighted at 2350. We said a break below 2350 would trigger the onset of at least a short-term correction, and so we're seeing that play out right now, with the market now targeting a retest of initial support, which comes in around the 2300 area. At this point, any rally should be very well capped ahead of 2375, with only a break back above that level to take the immediate pressure off the downside and suggest we're seeing a resumption of the significant strong uptrend in this market, potentially exposing record highs beyond 2400 and towards 2450 to 2485 further up. But again, for now, the pressure is back on the downside since breaking below 2350, and there's room for an acceleration down towards 2300. Gold. So gold continues with its impressive run as this market continues to show signs of basing off that 2016 low at 1122. putting in a series of higher lows and higher highs. And so a recent higher low is now sought out around 1200, which will be confirmed on a break above 1265, opening the door for a fresh upside extension all the way back above 1300 and towards the 1335 area further up. Any setback should be very well supported, with only a break back below 1180 to compromise the highly constructive outlook for gold.